Hey everybody, what's up? Just wanted to do a quick video on the markets here. We have a very important level right now for the market open on Monday. I mean, the people that I've taught markets and how to go about this business, I've always told them this is very, very important to pay attention to what the overall market health is, and this is a great way of doing it. Because after all, 3 out of 4 stocks will go in the general direction of the overall market of this right here. And if you disagree with that, I mean, we can do a real quick exercise here. You can pick any stock you want. I mean, Cisco. I mean, we can just go through the gamut here. It's all going to look the same pretty much. IBM, Ford, AT&T. No, it's not AT&T. Yeah, AT&T. All right, GM. I mean, we just uncovered like 3 or 4 different industries, and there you go. The importance of the overall market health is probably the most important thing. That if you do want to get involved in stocks, you really, really need to learn how to read this, because like I said, 3 out of 4 stocks will move in the general direction of the market. 75% of stocks out there will move this way. So things that I hear are, well, Marvin, this stock right here is the maker of this or that, and I think they're going to benefit greatly from this phase, and blah 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 blah. I mean, you can give me any reason you want. It doesn't matter, because the markets are in correction mode. Let's just suppose that, we're still looking at GM here, but let's go back to the SPYs, the overall market, because again, this is the most important. These lines that you see right here, these are trend lines that I drew way back when. All right, this is the last trading session right here. This bar right here, I just zoomed in. Okay, that was the 20th, right? March 20th, Friday. So the way to read these are called candles. Okay, this is the price of the market basically. Okay, and the way to read these things is give you a real pretty quick crash course. Is each candle represents a day. This whole thing right here. This is the high of the day. This is the low of the day. This is where most of the trading happened during that day, around this price level. If the candle's green, it finishes on the top end of this candle right here, the body of it. Alright? Versus what you had Friday. Here's the high of the day. Here's the low of the day. Most of the trading happened pretty much all over the day. I mean, it was very, very, it just covered the whole day. Just the market went up and down quite a bit. So most of the trading was within here. And if it's color coded red, it ends at the bottom of the candle. This is where we closed. Now, if you notice, this is the, let me back out a little bit, zoom out a little bit. Okay, I spoke earlier in the week, I believe it was Monday. I was in my car in Orlando, and I said, let me put this out there. I saw it the evening before, and I was like, you know what? Let's put this out there just to, give this thing some thought. And I believe, let's see here, let's go all the way back. Let's see when I drew that. I mean, it's amazing how far we got to go back now to find some kind of support where I think buyers might step in and start defending this market. But let's go to a weekly chart so we can get a better look at it. Alright, now each bar represents a week now. Okay, look at that. Oh my gravy. So to go back, it would have to be December of 2018 right here. And I was wrong last time I spoke to you. I thought it was December of 2019. Well, I knew what it was, but I just said it was the 2019 December. But actually, the last line in the sand is right here. This line that I drew right over here. Okay? 233 on the spiders, on the SPY, SPY. Again, shows proportionate movement of the S&P 500, right? So this week right here, this past week we just went through, right? Big range, huge range the whole week. You had up and down 300 points, 500 points, 600 points, whatever. And that's where you get these huge ranges like this. And this is normal. When you have a correction phase, these are the kind of ranges that you get. Here's the week of February 17th. Look how wide that is, right? Look how wide this is. And during this whole week, these weeks here, people are picking bottoms and saying, oh, this is the bottom right here, because we're going back up, right? And then you get crushed again. Oh, this is the bottom right here, right? So you get back up and you get crushed again. My personal experience has always been, hey, let's let this thing play out, because here's why. The popular belief out there is that you should buy and hold for the long term, and there is some truth to that. Okay, but here's what happens with that frame of thinking that most people, including professionals, don't take into consideration. When you have time, you have space, where the human mind, now we're getting into the psychology of this thing, and you're probably not going to hear this anywhere unless you went to a a professional traders course or anything, because they study psychology a lot. After all, what makes us buy and sell stock is fear or greed, not exactly in that order, depending on what side of the trade you're on, whether you're buying to go to see appreciation in the stock, or whether you're selling the stock short or market, whatever. Okay, same difference. Equity. So you're either buying equity or you're selling short equity. So what most people don't take into consideration is when somebody comes to me and says, hey, this is a time to buy, things are cheap. Well, I say this to them: can they get cheaper? Let's be real clear, real basic, simple, stupid. Can they get cheaper? Well, of course they can. Okay, so there's a probability that it can. I'm not saying that it will, but definitely there's a probability that it can, right? Because just to give you an example, if we look back, right, let's go back some more. Because one thing you'll learn is, when you start getting involved in this, is that markets repeat themselves. They're very cyclical in nature, and that is your friend, because you can go back and study previous markets and see how the market behaved in certain areas. Lucky for us, we have two corrections that happened it's like yesterday, right? 2008, very fresh in our minds still. I'm sure you guys remember it, right? Buy houses, because they can never go down. And if they go down, they'll go back up, whatever. Whatever the reason was. Buy houses, buy condos, right? At this time, right before 2008, I was a financial advisor, and it was like standing behind a 737 in the tarmac at OIA. Mr. and Mrs. Smith would come in and say, hey, Marvin, this 12% you're getting me of these mutual funds, man, and my friend Johnny or whatever is getting 30% on a condo in New Smyrna. Let me cash out my IRA, and so I can go ahead and buy 3 or 4 condos. I mean, this is the kind of stuff that happened. And you can't, when markets get so crazy, one of my mentors said, you know what, whenever you want to find the most risk in any market, just look to what everybody's talking about. And in 2007, 2008, happened to be real estate, right? Nothing can happen to houses. Houses will never go down. That can never happen. And it's actually, same thing happened in many other areas of the market, but the most recent time, I'm trying to back out of this thing so you can see. Let me back out some more. Let's go to a max weekly. Hopefully that'll get me back to 2000 so you can see what I'm talking about. Okay, here we go. Alright, so here is 2000. Okay, now this is 2000, 2001, 2002, 2003. Okay, now you're looking at this in a smaller scale, but okay, this was in the market. The technology bubble basically went burst, right? If we go back, we had an enormous bull run, right? You see that here. Okay, look at that, look at that. It was kind of crazy. I got licensed, I got into business right here. And I gotta laugh because, you know, in 2000, actually it was right around here, 2001, September 2001, right here is when I got licensed. Okay, so 1995 to 1999, what we saw was just ridiculousness. I mean, I'm talking just 4 years. I mean, look at the price right here on the right side, 53, right? The market went up in just 1, 2, 3, 4 years. It went up to 150, and that is insane. And during this period right here, I was a bartender. I was a bartender, and I was a bartender at Disney at a major resort and a big conference resort, and we would have these behemoth conferences that were going on, mainly technology companies. It was Lucent, Juniper Networks, Ciena, Broadcom, Cisco. They would all come to this hotel, and I worked at the pool bar with these companies. And I just mentioned a few, but there were many others that they didn't have. Like, if I opened up a lemonade stand in the street corner, I would have more earnings than them. It was insane what went on here. Okay, didn't matter, because, you know, you'll always hear me say price is the ultimate indicator, and, you know, there's always going to be a reason why, or a reason why not, but you have to go with the trend. And obviously the trend here was bullish, right? I mean, look at that. I mean, it was like, yeah, you had some minor corrections here and there, but nothing like this. It's obvious this is a bull market. Okay, then once 2000 hit, and then of course here is 2001. Now here's the interesting thing, right? Most people blame the bubble bursting on 9/11. Well, if you were trained, if you had a trained eye for technical analysis, this is what this is. Okay, I mean, I can start drawing lines here of previous lows, like here. Let me try to do that right now. Let's see here. A moment. Hello. Okay, well, let's do this. Let's do that. Let's go here. Let's get a dollar price level. Okay, so this is what technical analysts do. They start drawing trend lines, right? I just drew that one. Now, people can say, well, Marvin, on hindsight, of course you can do that because that's easier. Well, not really, because I would have done the same thing here. But let's just say, all right, let's just say that I didn't have all that data to the right side. Okay, that didn't happen yet. Okay. Okay, and I would have drawn these lines as a southern market. This doesn't exist way over here. Okay, I'm just drawing lines. Okay, so you have these trend lines, you have these support levels. Okay, and you know, there's training to do this right. I can draw them real easy because I just see them, but I mean, there's different ways of doing this, and I will get into that more as we go forward. I mean, I like to teach you, and you know, to each his own. You know, I mean, the decision is always yours whether to buy or sell, but I mean, this is purely informative, purely educational, so you guys get another view of things, a view that is more rational, not so tied to noise. Okay, which there's a lot of noise, especially today. I mean, we've got a serious concern out there. Remember, price is price, you know. But let's move forward. So let's just say that this is what happened, right? Now I'm gonna go move forward. I didn't know what was going on in the front here, okay? What was gonna happen. So we start getting data, right? Market starts. Now I'm paying close attention here. I'm going, wait a second. Getting close to the support level. This is a critical support level here, right? So I'm thinking to myself, okay, every other trader is looking at exactly the same thing that I'm looking at right now. Every single one, okay? So, we keep moving forward, okay? Now remember, this is a weekly chart, so each bar represents a week. But you saw these things break down. Actually, let's go ahead and, I can't do a daily because then it'll just break down shorter time, but let's just keep going here, okay? Look at this thing bounce right off of there, boom, right? So that's called a test. When you have the price of anything, a stock, anything, commodity, a metal, gold, whatever, bounce off of there, it's a test. And usually the next time, and these are things that you learn along the way, that this is actually a formation there. So now, and this will all start making sense as we move forward. You'll start seeing these things. Now, here's what happens, okay? Remember, I have these already. I would have drawn these already. Boom, boom, right? Off they go. And actually, so there's my support. Here's another support level right here, okay? So here comes 2000, right? This is the market top. This is when basically the whole world started to realize that what was going on way back here were a bunch of companies. I mean, a bunch. If you had the name .com tied to you, it didn't really matter. You went IPO, initial public offering, you went to the markets, banks financed you, and you will be up ridiculous amounts. And if we can go back and look at stocks back then, especially technology stocks like Lucent, like Broadcom, Cisco, and Ciena, Juniper Networks. I mean, and you would see basically parabolic charts that just go and just go straight up. Some of those companies, like I was mentioning, I was bartending back here, and the guys would come over to the bar. I worked at a pool bar, and they would be just throwing money at me. It's like, oh man, I just made 15 grand on Lucent in like 30 minutes. These are the kind of things that happen. You didn't have to be a rocket scientist. I mean, it's what happens. It's what happens when prices get so out of control. And when that happens, I often like to use the analogy of when you pour a draft beer in a glass. I mean, you have a lot of head on that, and all that frothiness is what you had here. Just a bunch of frothiness, really no body to what these companies were doing. Some of them, like I said, weren't even making any money at all. I mean, at all. They had zero earnings. Some of them had negative earnings. Didn't matter, because price, again, is the ultimate indicator. And when people, remember, fear and greed, in this case it was greed. When people start chasing prices, this is what happens. It gets crazy. It gets, I believe Alan Greenspan back in the day would call it, what did he used to call it? And Alan Greenspan was a Fed chairman back then. Rational exuberance, something like that. But, he gave it all these goofy names. But, I mean, so this is what you got, okay? But the market is a mechanism that free markets are pretty, especially, this is an auction. This is just, buying and selling. And you have a bid price and you have an ask price. The bid is what people are bidding for it, what the highest price they will pay for something. And you have the ask price. Okay, this is the price that whatever it is you're buying and selling will sell for. Okay, so the bid ask. Okay, that's the quote. So what happens is now we get over here to 2000, right? And as we move forward, now remember I have these lines drawn already. Boom, boom, right? And we move forward, okay? And you'll see the same exact thing in 2008. All right? So we move forward. Now we have a breakdown right here, okay? Where the price closes below that trend line that I drew way back here months before, the previous year. Breaks down, Another thing that I look at a lot is volume spikes. If you look at this volume, although it was pretty high, right? This volume right here, look at that volume. It was never higher prior to that. And what is volume? Volume represents shares traded. Okay, in other words, activity. And it's often said in the technical world that whenever you have a move, a gigantic move, which this was, guys, you're looking at a weekly chart, but this is like massive losses right here. Okay, 2000. All right, and that's just from January, okay, to March. Okay, you had a drop from 137 to 107. You figure out that percentage loss. Okay, massive loss. Okay, now here's the thing, we just come from this, and most people that were involved in this did not know how to sell. And I always say, you know, buying in this business is an easy thing to do. It's selling that is hard. And, you know, and that's where, and you could say the same thing for the real estate bubble, right? Because you had people buying. All they knew how to do was buy. And some people were smart enough and they sold out, but most people didn't. Let's be real. I mean, they bought, you know, you had, you know, servers at Chili's that owned 3 houses. You had, for whatever reason, I mean, I know there were a lot of mechanisms that facilitated that, and we won't get into those, but it was what it was. It's still an emotional decision to buy, not thinking about the repercussions going forward. So we go over here, and you know, we crash through this level. Okay, now this is 1 week, another week, okay, so that's 3 weeks right there. Okay, so, and look at the volume, just massive trade. Now back to volume. Volume is, I pay attention to volume. Why? Because the people that move markets, okay, it's not you and I. The people that move markets are banks, institutions, mutual funds, okay, big money managers, and they're trading. When they establish a position on a stock, they take a good 1 week to 2 weeks to either get into a position or get out of it. In the meantime, while they're doing that, they leave these huge footprints. Okay, all right, they leave big footprints here, and it's like you can see it. If you're trained to see it, you can see it. And what does that do? That confirms to me that the big bus is moving. I always call it a bus, right? So when these companies start to move in a big way, all right, then you have these massive moves, and coupled with large volume. Okay, now again, we're just looking at weekly charts here, a weekly chart with each bar representing a week, but regardless, it's proportionate, right? Because if you look back, there's nothing quite that high, is there? Right? Maybe here, and look right here, it was a huge drop, and then it recovered from that. So, you know, we plotted that line there, and let's just see if this comes into play later. Remember, I'm doing this without having this information, so, which I'm doing that right now with today's market. And I'll show you that as we go forward. I'm trying not to make this too long, but unfortunately, you know, you have to go back to see exactly, you know, how traders come up with this stuff. Okay, it's not luck, it's not gambling, it's actually pretty methodical. So, you know, you have back to here, right? Huge cross, we go under my trend line. Right now, right there, I'm raising cash. I'm selling stock already. Don't care whether this thing bounces. Now, after it closes under that, it's got to close under. And we'll get into that in a little bit, because I'll show you what's happened here this week. Quite interesting. But it's got to close. Now, it closes, high volume, I'm raising cash. Do I sell everything I have? No. And, you know, everything's proportionate. I might be talking about like 1,000 little shares of something, but I mean, it doesn't matter. It's proportionate, right? Whether you're controlling 100 shares of a stock, 20,000 shares of a stock, everything in between, it doesn't matter. It's all proportionate. Price is price. So this thing closes right below that level, right? Crushes all the way down, and then it finds footing here. I snap another trend line. See it right there? Snap another trend line. Now, it is obvious now that the market is, in this case, is setting lower highs, right? You have a high here, you have a high here, another high here is lower, another high here is lower, another high here is lower, okay, another high here is lower. Whenever I see 2 or 3 points, boom, I start drawing another trend line, right? So let's go do that. Okay, let me zoom in so I can do this better. Okay, so I'll go boom. Yeah. I mean, even though I just go to this one, okay, let's just do that. Now let's go back out. So back out. So again, I don't have any of this info yet, right? So here's my original trend line, breaking down, large volume, lower highs, lower high, lower high, lower high, and look what happens here. Starts hitting that. Okay. Now, if I was to go back to 2000 here and show you a daily chart, this blue wavy line here is a 50-day moving average. This purple line right here is a 200-day moving average. Two levels that are highly critical, very important. Why? Not because I said so, because every other trader, professional trader out there, uses these two mechanisms to make buying and selling decisions, to manage risk. So we break down, not only do we break down here, but we also break down the 200-day moving average, right? Then we come back up and hit this trend line that I already drew from 2 points, right? Because it's struck, right? And it's going to continue. So boom, right? So you can start seeing the downward pressure on the market, right? And look at this thing. It just stays under that trend line. Now, if you look at these red lines here, these red weeks, what's happening? Hello, more volume, even greater volume than what I had here on the breakdown. So it's intensifying, right? Now, we're looking at this thing, guys, and you're going, well, that's no big deal. It's a little graph, whatever. Guys, look, it's 140 here. Down here, we're at 94. Figure out that percentage loss, right? So let's move forward. You get another bounce. Oh, this is the low. Well, I also drew this line, right? So there's a bounce off of that line. Okay. So we bounce off. But here's the thing. Markets, when they get set for a new appreciation phase, right? When they get set to go higher in a meaningful way, they don't do it when the market's doing this. No. Okay, especially in a downward trend, right? And I probably would have done this as well at this juncture. I would have gone here and would have gone here off to the side. So I would have had that right there. That's called a fan. But anyways, but you see, everything is just downward pressure, and there's really nothing breaking these lines to show me otherwise that the market wants to come back up anytime soon. In the meantime, here's what happens when you get wrapped up in this environment and you don't have this particular train that I'm showing you right now. Okay? When you first visited your broker way back here, everything was happy, lucky, good, okay, everything's great, we're making money, nobody really cares. But when you start breaking down, even right here, the market starts to break down, right? Because it really started right here in late 1999. And then it just went straight down. Some of you that have been around, I mean, you remember this. The buy and hold strategy is okay. But the major component is that you need time. Because if you had a 65-year-old out here, okay, they don't have as much time as a 20-year-old. And to be excuse me, to be honest, I mean, I don't like losing money. I don't know about you guys. I mean, I just don't, right? And especially when I see things like this. And this for me right here, by the time I got here, I was already 100% in cash. I was done. And I stayed in cash all of 2000, pretty much. All of 2001. Actually, not all of 2000. All of 2001. All of 2002. Right? But let's move forward, right? I mean, nothing's changing here. There is no break to the upside. There is no break to this trend line. There is no, think of this as a roof, right? And then we're setting lower highs and we're setting lower lows. See them? So let's go forward here. I mean, so this is what you do when you manage risk. You look. So let's go forward. Okay. So finally, when we get down here, now we say finally when we get down here. Oh, and by the way, most people blame this market on 9/11. It wasn't 9/11's fault. 9/11 just intensified it. Just like coronavirus is intensifying this correction. The correction had to happen. This correction right here had to happen. 9/11 is right here, folks. Right here. Right there. Right? 2001? Right? Right here. You're already in a correction phase. 9/11 happened. What was 9/11? Right over here somewhere. And just, you know. But, you know, it is what it is. There's 9/11 right there. Somewhere. There's 9/11 this week, right? Major. And then we came all the way down. And look what happened. Oh, how interesting. Right? This low right here acted as support. Right? So there's a lot of things that went on during 9/11 financially. I mean, everybody, you know, I think back then, I forget who the Fed chairman was, but, you know, every time something like this happens, and you're seeing it today, the Feds get involved. They lower rates, they buy bonds, they try to what's called propping up the market. They do everything they can to save it, pretty much. So it's the only mechanism that they know. I mean, the major function of the Fed is to control inflation with monetary policy. So as things get too expensive, right? They raise the rates. Things get too cheap, they lower the rates. That's basically what they do. I mean, so they sit there and, you know, here's 9/11. Now look at all the losses we've had already before 9/11, right? I mean, so 9/11 just intensified it. So now we get a bounce. Everybody starts printing more money, more money. We go more into debt, right? Way up. Have we broken that top line, guys? No. No, we have not. I mean, so it was a stay in cash position for me all the way through. Now we come back down even harder, right? Look at the volume spike. Look at this. Right? And confirming this move. Look at that. Right? So you get all of this, right? Now we get a new level here. I would have probably drawn one here because once you get too far back, the market forgets, right? So I would have drawn that line right there. Boom. I would have dropped. Oh, I know why, because I'm not using the price drawing. So let's say I would have drawn a line right here. Okay, look at that bounce. Not knowing what's going to happen here, I would have probably drawn a line right at this low, right? Look at that bounce. Boom, boom. Okay, now this, we're coming down, right? Hit the roof, 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 hit the. Look at blah, 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 blah. I mean, just to the T, guys. Look at it. Volume intensifying, right? Then look at the way up. Volume is like blah, less than when it came down, right? Not very meaningful. Over here, you break through, but you still have this trend line to contend with. Look, it hit it right here, came straight down again, even more intensified, right? Here's July of 2002, right? You know, you guys are looking at this, but the money lost from here to here, there's people literally jumping out of windows in New York. I mean, I'm not kidding you. There's people dying. I mean, there's people losing their life savings. I mean, so average down, because that's all they know how to do is buy, and they don't know how to sell. They have no sell discipline, right? During this whole time I'm in cash, because there's nothing confirming itself to me that it wants to go higher. I don't see it yet, right? So let's keep moving forward, right? Now we have a bounce and we have a bounce. Makes this a solid support level, right? So we trade sideways a little bit. This right here, from here to here, it's called a consolidation phase. Happens after every bear market, right? And during that consolidation phase, things start to perk up a little bit, right? I'm still not buying. I'm still waiting for what's called a follow through day. I'm waiting for the markets confirmed. Now, on the way up, I'm looking for a close above. Before, I was looking for a close below, right? To think I'm going lower. Now I'm looking for a close above trend lines to see that the market's going to start moving higher. And we kind of get that here, but not really. Volume is decreasing as we're going up. Bounce. This looks good, right? So you can probably throw a line right there. Not right there. I mean, I'm going through this, and the more we look at it, the more it'll start making sense to you. Let's put a line right there. Oh, gosh, it gets so touchy when you... Good gravy. Right there. Alright? Hopefully I won't lose this. Alright. So here's a consolidation phase, right? Draw a line right there. Now I'm looking for a close above this on high volume. Okay? Just to confirm that, because look what's happening too, right? It's trading sideways, but now I'm crossing over this long-term trend lines that the market has been smashing his head against for the better part of 2 years. And now I start to get excited. During this time I'm doing homework. I'm looking for stocks that, look strong to me, and what I call leaders. I'm looking for stocks like that, and so when the time comes, I can jump on them. Because remember, I want this thing to be on my side. I want this thing. This is like the tide. This is like a current. This is like when you find a plane and you have a headwind. If you were to buy stocks during this environment, you have a headwind. It'll be real tough to make money. Why? Because I said earlier, 3 out of 4 stocks are moving the general direction of the market. So if this is the general direction of the market, how do you like your chances, right? If you don't believe me, look at this. I mean, you're talking 40-50% losses in the better part of 2 years. Okay? So the buy and hold strategy, if you have time, it works. If you have time. And that's a big if. But another caveat that I haven't mentioned yet is psychology. Okay? This is a very psychology oriented business. Okay? Professional traders read books on psychology like crazy. I mean, and because the best traders in the world, they are able to keep their emotions in check and not jump the gun. This right here is jumping the gun. Oh, we're back at it again. Okay, man. Oh man, sell. So what happens is, oh, we're back at it again. No, we're not. Okay, so this drawing trend lines and looking at the market this way gets rid of those emotions. It keeps you level-headed, right? So they rely a lot on their craft. They rely a lot on the charts. Let the charts, and you often hear me, I got to see more cards out of the deck. That's why, because as you see more confirmation, then you can start making better decisions. And over here, we start moving sideways. We get into a consolidation phase, which is totally normal to get out of a bull market, totally out of a bear market. This has to happen. You notice that the ranges get tighter. It kind of gets compressed, right? And then finally, in 2003, right, Around April, we get this little bit of a crush, right, over that trend line. Now, do I go 100% in? No. No, because still, I've got this trend line to deal with now. I've got this trend line to deal with now. So I'm going to go in, let's just say I had X amount of dollars. I'm probably going to go in with like 25% of it. And it's totally against to what you have been taught, which is buy things as they're coming lower. No, you buy things as they're moving up. You don't buy them as they're going lower. Why would you put money after bad money? Right? I mean, that just makes sense. But you've never heard that before. So as the market starts confirming itself, now I'm getting a tailwind. I don't have a headwind anymore. 3 out of 4 stocks go in the general direction of the markets. So let's keep going forward. Okay? Oh, look at this beauty. Now we start trading sideways some more. Okay, volume is calming down, typically normal for a consolidation phase, right? I'm getting excited. And remember, I didn't go in with both feet. I just put my little toes in. I have a small position at this juncture. I don't have, you know, all in again, you know. 25% equities, 75% cash still. Okay, because I'm still looking for more confirmation. So let's keep going forward. Okay, more consolidation. Look at these levels now. Look at this market tightening up now. Look at this, beautiful, right? Getting excited, doing my homework, looking for things that are going to be the leaders of the next appreciation phase, the next bull market, right? And I keep coming. Oh my gosh, did I just do that? All right, hit the wrong button. Sorry about that. So I keep going forward. Now I'm getting more confirmation. I'm adding in. Okay, I'm adding into my position, maybe about 35-45% stocks, right? So I keep going. Now we're probably going to get a test right there. Look at that, we get a test. Beautiful. Okay, I don't like this, a lot of volume, but big but, it held my support level, didn't it? Usually that's a bullish sign. Let's keep going forward. Usually, remember, everything is probabilities, nothing's for sure, right? So nobody knew that 2 planes were going to hit a building in New York. So we work with probability here, and that's what this helps you with. So here we go. Let's keep going forward. It's going to retest that line. Look at this. I mean, it's like, hello. Another test. A close below it. Right? I might have gotten stopped out there. I might have sold some like an idiot, and that's okay because I saw a close below that trend line. Right? These are weekly now. Okay, there's a lot of movement here daily. I'm still on a weekly, right? Yeah. So, you know, let's keep going forward. But you see now you're starting to see higher highs, right? Higher highs, higher lows, right? So let's keep moving forward. Now I'm already into 2004. Okay? Let's keep going forward here. Look at this thing bounce right off of that trend line and just keep going higher. What a beauty. Right? Let's keep going here. Look at this. Bouncing ahead off an old trend line, right? So I might have, this is what traders do. I mean, and you know, people don't get too caught up on, oh, you're a day trader or you're a long-term investor. Let me tell you something. What do you do to invest in the long term? What do you have to do? Not a trick question. You have to buy, don't you? You have to buy something. You have to place a trade, right? And what do you have to do to get out of it? You have to sell it. You have to place a trade. My thing is I'm going to be an investor as long as the market lets me be. When the market violates certain levels, guess what? I don't care if it happens 2 days after I mean, I didn't know this was going to happen. I had no idea this was going to happen, right? But I'm looking at my trend levels and I'm looking at consolidation because I have a trade knife for it, and I'm like, you know, a break over this. Hey, my next resistance is not to here. I'm going to buy a small piece, see where we go. Okay, I happen to be right. Right? And then a little bounce here, a little bounce here. I'm getting excited. Right? I'm like, you know what? I'll step back in a small way. Didn't know that this was going to happen. I'm talking major percentage gains here, guys. Right? So maybe when I get to this resistance level, depending on how it behaves, I might sell a little bit here, making a profit. So let's keep forward. And bear with me. I'm going to bring this whole thing together. Look at the bounces. Look at this roof. Bing, 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 bing. Right? But if you notice, it's tightening. Let me show you what that looks like. It's tightening. Give me a second here. Look at it. It's starting to tighten, isn't it? Right? So now you got this. Right? And usually when it tightens like that, you're going to get a big move either to the upside or to the downside. Let's just see what happens. I don't remember what happened during this time. I'm doing it like if I was live trading. Right? See what happens. Look at the tighten. Right? Now we get a little breakout over that line. Volume is pretty decent. Right? Buying some more. Why not? Right? Ah! Back out, idiot. Alright, buying some more. Hit the run button again. Alright? Let's just see what happens. Right? Hello. Right? Even if I got stopped out here, even if it broke this trend line, it never closed below this line, did it? See it? Just remember what I said, the closest where the body is. Look at that body. That body's above that line. Look at it. It traded below it, but it never closed below that line during that week. Even here, it's a little bit above that line. Right? So I'm still in the market there. Okay? Hopefully you can see that. Oh, let me back out again. Ah! What did I just do? I gotta back out. Come back this way, you idiot. So touchy. Let's go back. We go over here. Oh, here's a tightening, right? Here's a tightening. Boom, we break out. Volume's decent. And this line is the average volume. So anytime you see a volume above average, hey, meaningful, right? And look, boom, breakout right through the resistance level. That's called resistance when it's at the top. This is support. This is support at this juncture. This is support, right? So now we're going to keep coming. And now there's clear skies up ahead. No resistance. This is when you really start to get excited. Volume starts to come in big time. Hello. This is when you really get excited because, okay, look at the bounce. Look at the bounces. Look at the bounces off of these levels. Right? Hello. Right? Some major price gains, guys. You don't see that. Oh, we're heading up in resistance now. These are lines that I drew way on back when, right? See what happens. Bing. Bing. Boom. See it? Right? Now that's 2007. We're into 2007. Right? Here we go. Real estate bubble. Here it comes. Right? The market can get over that resistance level. Right? Well, it finally does, but not really. Comes straight back down again off that resistance. Right? Now you see how it's getting wider again? It's getting really loopy and crazy. Right? Now, guess what? We're entering another sideways trend. Going to be another change in direction. Maybe to the upside, maybe to the low side. I don't know. Let's see. Uh-oh. Here we go again. Old trend line that I drew way back when with you guys a while ago gets violated. Closes below it. Big volume. Here's 2008. Here's a real estate bubble, right? I'm already raising cash here because right here I'm raising cash. Okay, a little bit, not all, but I'm coming off the table now. I'm like, wait a second, this doesn't look right. So let's keep going here. And here we go again. Now we start setting, here's that thing all over again, right? We're setting lower highs, lower lows, right? So now I'm off this point, I'm striking that. Okay, let's go striking the line, trend line. All right, let's see what happens now. Buy condos, Marvin. Buy condos. We're good here. Now, if I was to show you the home builders during this phase, they all looked exactly like this chart. Actually worse. A lot worse. Because remember, this is the overall market we're looking at. But the home builders were even worse, right? Oh my heavens. Here we go. Wow. Financial crisis right here, guys. Right? If I wasn't all the way in cash over here, I was definitely over here. Major breakdown, huge volume, right? Here we go. We're back to a bear market. You see it? I'm taking you through history here so you can understand. Right? Start to consolidate a little bit, getting excited. Not really, because I'm breaking down here. But, you know, this might be the start of something new. But I still need to see. I'm still going to have to contend with this, right? And this. And this. And this. See all this pressure? These are all sellers waiting to sell their stock because they're panicking. They're just waiting to get back break even. I mean, guys, from here to here, right? I mean, 140 to 80, figure out the percentage. The people are panicking here, and they can't wait just to get back up here so they can start selling. That's why these levels become resistance, because as the price keeps coming up, they sell into you. All right? Because they're waiting to get out. There's people here that want to get out of their stock. They're just trying to salvage what they can, and the minute they get any type of bounce like this, sell. Like this, sell. Like that, you know, they want to sell out. This represents sellers or buyers, but this represents people because there were levels that were created from way on back, right? I mean, I drew these lines way back there, beyond this chart back that way, years ago. So let's keep going. Now we're into 2009. Everybody's bailing their mother out. People throwing money into the BICs. And we think we're out of the woods. I mean, look at the volume, how dismal it is on the way up here. You see a below average volume on the way up. You know, I'm still kind of like, I'm probably still in cash here. And you're thinking, oh, Marvin, you're losing money. But wait a second. I've been out since down here. Guys, if I buy a stock at $10 and it goes down to $5, how much money have I lost? It's not rocket science. 50%, right? But how much money do I need to get back? What kind of a percentage move do I need to get back to 10? From $5. I need 100% move. How do you like your chances? Right? So cash is a valuable position. There's times that you have to be out of the market, because guess what? When there's another bull market, you don't have to be the first one at the party. You have to just sit there and wait for the market to confirm itself. Make sure there's no cops around, right? You don't want to go over there and get arrested because whatever, you know. I mean, oh, getting off topic. But I mean, you know, markets will confirm themselves. And if it's a start of a true bull market, one that's going to last 3 to 5 years, you're going to get a consolidation phase. You're going to get a phase where things will start to build, and you're going to be able to see it, and you're going to be able to act accordingly. But to jump the gun here, you know, I mean, you see this right here. There's people buying here. Averaging down, right? That's what you talk. Average down, right? $10 becoming $5, becoming $4. And we already discussed what kind of percentage move just to get back even. Wouldn't you like to have your cash here, just hold on to it, and once you get as low as you can, wait till the market proves itself and then go higher? I mean, hello, right? So we're going to keep going here, right? Let's keep going. Trucking through these resistance levels. Volume is dismal, right? On the way up, so it's not very meaningful. And you saw a lot of this during this time, because remember, during this time the government is throwing everything but the kitchen sink at this thing, right? Cash for clunkers was the biggest. I mean, you had so many different programs out there that, you know, just to spur the economy. All cash for clunkers was a way to get the auto industry somewhat back to its feet, right? Through sales of new vehicles. I mean, they just made up a story, but whatever. So we keep coming here. But look, see, it's just, you have all this resistance. There's sellers over here just selling into you, right? And I missed this whole move. I missed it all of it. But that's okay, because I'm out way back here. You're still playing catch up. And that's if you were completely correct. See, that's the beauty of the system. You don't have to be 100% correct. You could be 50% wrong and still make money, because the trend is your friend, right? So here we go. Let's keep going. There's a lot of government intervention here, man. A lot of government. I mean, we're going through this, but man, there was a lot of programs here. Rates became nothing. I mean, and Alan Greenspan started that, you know, playing the markets with rates. I mean, that's why if you deposit $100,000 today in a bank, you can only get probably 1%, you know, maybe, because rates are so low. If you've been thinking about remortgaging your house, don't think anymore. Go do it. Go do it. I mean, if you don't believe me, go talk to somebody that's been around since 1985. Ask them what the rates were in 1985. 15%, 14% mortgage rates. All right, this is historic lows. The rates, I mean, even if the rates go down to 2, you're still doing great. I mean, just go ahead and refi your mortgage. Good gravy. I mean, so here we go. Right, but look, we're still under this massive drop, which just bleh. I mean, I stayed out this whole. I mean, I missed all of this, and that's okay, because I'm not playing catch up, right? So here we go. No, it's just like blah. It's all this sideways crap, right? Go higher here. I missed all of this. All of this. And the reason being, not all of it. I mean, I stepped in small ways, but I mean, you would get stopped out here, and we'll get into what stopping out means. You know, it's we'll get into that. But I mean, it's just things that happen that, you know, this is like, it's not a true market. You know, but sometimes, and this was a bad trade for me, because a bad non-trade, because I was waiting for confirmation. And remember what I said to you, price is the first indicator, and I failed to look at that here. Okay, let's keep going forward here. All right, now going 2010. All right, let's zoom out a little bit. So it's kind of like just a sideways, you know. Let's see here. Okay. But look, all of this appreciation, guys, look at it. It's just breaking even. Right? Right? Just breaking even. It's that obvious. And to get this between 2009, the beginning of 2009, right? 2011, that's 3 years worth of market. There was so much government handouts here. So much. Bailouts, all the bailouts. Nobody went to jail. I mean, big banks got bailed out. Everybody got bailed out. I mean, there was so much government intervention here. So much government going to the rescue to make this happen. And it's obvious. Look at the volume. It's dismal. It's just propping up of the market by government. I mean, Alright, so now we're just catching up here. I mean, all of this. But you know, you do have a clear trend line now, don't you? You've had it. Let me get rid of this thing. You do have a clear trend line here, right? I'm sure I stepped in here, but very, very small way because I was waiting for confirmation. But anyways, here we go. Gonna go higher here. Let's keep going. Back out a little bit. Let's keep going. But look at this bull market that we were at, you know, overall. Let me see here. Okay. Enter Donald Trump. Let's see. Now, this is the most recent phase that we've been in here. Alright, so 17, 18, 19. This is Trump presidency starts right here. Okay, and just now it starts getting crazy again. Holds right here. Bounces up. Guys, from here to here, that's 40%, 50% in 14 months. So if I was to go back, I mean, look at this move from here to, look at this, how big this is. From here, 230 to 339, about 100 points in 3 years, right? Versus 2008, 67 to 2016, 237. But you're talking 8 years. We did half of that in 3 months. I mean, in 3 years, excuse me. A little bit over 3 years. So of course you had to have a correction. Of course you have to have a correction, because when you start getting so parabolic above the averages, look how much it just goes crazy, right? You start with a small correction. Now let's go back to our daily, which brings us to the present. Alright? So let's go ahead and now each bar representing a day. Alright? Let's see here. So here's the bull market, right? And then right here in October of 2019, it just, I mean, you're talking from 284 to 339. Figure out that percentage. October, November, December, January, February. 4 months, that much gain. Parabolic. It doesn't make sense. But price is first, right? We go with it. Then here's a level that I drew, boom. Here's a level that I drew, boom. Right? Breakthrough, volume comes in. And, you know, lower highs again. Right? Massive volume coming in. You see it again? Volume coming in. And this volume right here, what happened this week of February, the last week of February, my heavens, we haven't seen that in a very, very long time. So confirming this move to the downside, right? All of this becomes resistance now, lower highs, we're back at it again. Now this correction was sharper. Why? Coronavirus. Okay, but make no mistake about it, this correction had to happen because the markets were so extended to the upside. It had to happen. Right? So here we go. No confirmation yet. No confirmation yet because you have all this levels. Here's a test, right? So we could have struck a line from here to here. I didn't. I'm just looking at these price levels. Now, since we're looking at a daily chart, each bar representing a day. Here's the 50-day moving average. This blue line, this blue wavy line, right here, the baby blue. Here's the 200-day moving average. I closed below this line. Big no-no. Get a close below that line. Massive volume. That's a sell signal. Now, I'm not saying I sold everything here, but I certainly sold some because I wanted to wait for confirmation, right? Because I'm thinking to myself, maybe it'll hold at the 200-day. But I still want to cash out a little bit here because this is meaningful. So you get a crush under that, come down here, and I'm thinking to myself, man, maybe I'll buy. I think I actually bought a little bit here, only to get stopped out because we closed below the 200, and then that's when I knew something is not right here. Then we had all these trend lines that I had drawn, which I thought might provide some support, and we go crush right under that as well. The volume starts to intensify, and now at this juncture, right at this juncture, I'm all in cash. Probably around here, I'm all in cash already, right here, 100% cash, missing all of this, and I'm still in cash. But it's for you to decide. I mean, you want to buy and hold, that's fine. For me, it hasn't been a very good strategy. That's just me. Another thing that happens, and I'll finish with this. Another thing that happens with buy and hold strategy, and I'm just going to tell you a story. A person goes into a professional and says, hey, I got $100,000 I want to invest. The professional says, okay, well, let's sit down. Tell me about your life. Tell me what you're doing. What are your goals? What are your financial goals? This and that. Okay, great. So I want to ask you a few questions. They basically run down this, and they have different names, but they run down this financial questionnaire where they do a financial review. And through this financial review, they come to a conclusion that offers them what your risk tolerance is. How much risk are you willing to take? And there's a lot of factors that go into it. I mean, your age, your occupation, your obligations, how much debt you have, things like that. And then, of course, when do you want to retire? Are you 45? When do you want to retire? You're 55. When do you want to retire? You're 60. When do you want to retire? Right? Different for everybody. So all of these things come into play when, you meet with this person. And stockbroker, financial consultant, banker, financial advisor, they all do the same thing. Licensed people that can help you transact the business. All right? So you go out there and, you meet with this person, and, you run into a phase like this. And this is what happens. Immediately you get on the phone because you get your first quarterly statement, your first monthly statement, and you might be in from here, which is, or from way back here at the start of this mini bull that we've had, right? And you come out here and you get way up here and you're good, man. You get your right here in January, you get your 401k statement, you get your whatever, your IRA, whatever investment account, and you're just thinking, man, all is good in the world, right? You made a ton of money. You're up 30-40% in your portfolio, and you're thinking, man, this plan works. Now you run into this where you lose 1, 2, 3, 4, 5, 6, 7 or 8 months of gains in 1, 2, 3, 4, 5 trading sessions. Hello. Yeah, that'll get people talking. Believe me, I know. I've had many of them call me, Marvin, what do I do? Right? So you put your best foot forward back here when you meet with this person, and you say, you know what, I feel comfortable with this. That's a great idea, whatever. And this happens. And you get your statement, and your $100,000 is now, you see a big fat negative in red, negative 30 grand. And we can play with, I don't want to be exact with the numbers, but I mean, hello, right? Look at this. So you you call them up, and this is what happens. Okay, call them up, get them on the phone, probably been on the phone the whole day, and tries to calm you down. Hey, everything's okay, you know. And now we have valid excuses, actually, you know. Unemployment is the lowest levels in history, which they are. People are making more money than they've ever had before across the board. Doesn't matter who you are, minorities, you know, everybody's making a ton of money right now. The most money they've ever made, and it's in the numbers. Proof is in the pudding. I'm not making it up. There it is. You know, they're historic numbers. I don't care how you want to look at it. I mean, unemployment is at the lowest levels it's ever been in history of this country. So we have valid excuses now, which we didn't have those back in 2000, 2003, 2008, 2011, 12. We didn't have those. People weren't in the situation that they are today in that regard, right? So now you get, you know, well, you know, I think this is an oversold situation, Mr. Client, but I hear your concern. Perhaps you should come in and we can meet and go over it and stuff, and go over your financial situation again, right? Because after all, it's been 6 months and it's a prudent thing to do. You come in and guess what they do? Another financial questionnaire. You know, and they do the whole risk tolerance thing, and they kind of find out, guess what you're going to find out? Yeah, your risk tolerance is a little bit more conservative now based on the questions that you've answered. Well, of course it is. You've lost 30 grand of your 100. So now you sit there and you say, well, so let's go ahead and move out of stocks a little bit. Instead of 60-40 stocks, let's go 20% stocks, you know, 80% fixed income, cash instruments, less risky, whatever. So he sells you out at the bottom, right here. Okay? But you still have stock. You still have stock, right? And you come crashing down some more. Now you're panicking some more. Hey, what's going on? What's going on? You know, it's the same thing all over again. In the meantime, you're getting crushed. I mean, am I making this up? You guys are out there. You tell me. Are you even having conversations with your broker and financial advisor? You know? I mean, hello? You know? So it's no fault of their own. That's the way the industry is designed. In the meantime, they make a commission when they sell you out, by the way, and they move money. When they buy something new for you, they make a little bit of money. They're making money. Alright? You're losing. Okay? You're losing money. They're making money. Bottom line, they are. I mean, I know they're nice. I know they send you a birthday card every year and everything, and this and that, and they go around smooching around in parties with you and everything. But hey, this is the truth. This is what's going on. So, you know, now we are down here, and earlier this week I said I was watching this level right here, 233 on the SPY, right? That was the last line on the sand, because there's nothing. It's like an abyss down here. There's no support whatsoever. So scary to look at. Well, you know, definitely in cash. I'm not involved in this. Are you out of your mind? But that's just me. It's for you to decide. You know, this is not a recommendation to sell or buy. I'm just telling you what I'm doing. So, and why I'm doing it. So, you know, it's for you to decide. But have conversations with professionals. See what they tell you. I bet you hear a little bit of the same thing. You know, this is oversold situation. When are you going to retire? 30 years? Yeah, go ahead and get in, whatever. Yeah, that'll work. But let me, I wanted to end on that. So, this notion that you're going to retire in 30 years, don't worry. Markets are going to do what they do. In every market correction, especially a harsh one like this, all of that BS goes out the window. You don't have what it takes. I'm here to tell you. You don't have what it takes. Professional traders don't have what it takes. right? So what happens is your emotions take over. And if your emotions don't take over and you're a married couple, your significant other will help you out with that. They'll be like, no, get out of this. We've lost 40,000 of our 100,000. We can't do this anymore. Just get out. And you get out down here in the low, when you really should have been paying more attention up here. And this, folks, is why I'm doing this. So you guys can see. I'm not telling you to sell anything. I'm not telling you to buy anything. I want you to start learning this so you don't catch yourself holding something. Worse yet, adding to something, adding to a bad situation, averaging down, which multiplies your losses, right? Right? So, I don't know. It's just something that for you guys to think about. And hopefully you'll stick around and look at these videos a little bit more as we go forward. I'm just hoping on Monday we don't close below this right here. Now this is the level. Let me back out again. This is getting confusing, a little bit too crowded. So this is the level that I was looking at, and in the beginning of the week, I told you, if you guys have been paying attention, I wrote a video and I said, I did it at 6:30 in the morning. I believe it was Wednesday. I said, I'm looking at this level and I want to see a close below this level, not a trade below it. So here is the 16th, 17th, 18th. If we look at these days, let's look at them inside of that day. Let's look at a 15-minute chart, 5 days. Okay, let me back out. Okay, let's look at this, because this is very telling. All right. Very next day, when I said that, came down. We got really close. We traded under it, and look at this. Somebody hit the red button at the end of the day. Boom, and closed right up here. Then we went into the extended hour session. This is Europe and Asia, right? Trading futures. Open up 9:30. We go higher. Beautiful. Maybe the start of something new. Still need to see more cards out of the deck. Close here higher. Great. This is still intact, right? Futures go higher. I'm thinking, man, we're in it now. Good. Come down here, and this is the last trading session this Friday. Boom. In the meantime, by the way, one moment. Let me back out a little bit. Okay, I still drew a line here because this was a new low set on that day. Even though we didn't close below it, I still drew a line right here, right? So we go and close above it. And the next trading day, we stay above it. Good, and then enter Friday. Let's do it now. Let's I want to still keep a view of that. All right, boom, stick. Set that new low. Didn't quite put it on that point, but whatever, don't matter. So, boom. Side, enter Friday. Alright, look at this, guys. We closed. This is a critical level, right? We finally closed below it, but we closed above the recent low of 2 days ago, right? Wednesday, I think this was Wednesday. Yeah, Wednesday, Thursday, Friday of Wednesday. But we're still below the critical level. And here we are right now. Here's the futures trading below it. Okay? Below that level. I mean, totally in cash right now. I've been in cash for probably the beginning of, I think, late February. I showed you where that was. But now I think this is not good. I hope to God that this here closes opens up higher and gets back above this trend line very, very quickly, very soon. So that's what I'll be looking. I'll be looking at this 233 level on the SPY. I really want to see this thing get above this, because again, the 233 level, as we go back to a daily, this is intraday chart. Let's go back to a daily, on your daily. Okay, that 233 level, we closed below it, but we held that Wednesday low. Look at it, we held that Wednesday low, but we're still below this level. Not a good thing. We're actually below. Let's go back to intraday. We're actually below that Wednesday close too. So when we look at that, let's go back to a daily, and I back out. I have to use a different time frame. Let's go to a weekly, yearly, a 3-year weekly. When I look at this, where's your support, guys? Where's your support? There is none. I call it the great abyss. So we need to get, I mean, right out of the gate on Monday, and that's why I think the president is like, he's working night and day right now. All of them are, because they're trying to figure out what kind of, he already said it today, there's going to be a massive, massive stimulus package like you've never seen before. He said that today. And this is why. Because right now there's nothing to support this market. Absolutely nothing. Alright, but just have to wait and see how the market opens on Monday. Alright, didn't mean to scare you, but you know, it is a scary situation. So better late than never, because as we back out of this thing, let's go to a 5-year weekly. I mean, look at this. Maybe right here we'll find something from back here. But you know, they say the market forgets. Once you get past 2 to 3 years, the market forgets. So we could get another bounce right up here somewhere. But look at the percentage gains. I mean, 228 to 210. I mean, we might get another bounce here. We might, in this area, right in here. Let me see something real quick. Here's a support level here. We might see something here. Price level. That's what I did wrong. I might see something there. Let's see where that lands. And again, with a big emphasis on might. Gets so touchy when you're dealing with these large time frames. Right here we might see, but I mean, you're talking 229, 230 to 220. Let's see another bounce right here. Let me show you what that looks like on the daily chart. I might get a bounce right here, but after that, it's like, you know. But again, I'm picking out resist support levels from, you know, how many years ago? I mean, so they might not hold. They might not hold. I mean, really looking forward to what Monday brings. Really looking forward to what the White House is going to roll out. I'm sure they're rolling out something tomorrow, Sunday. There's no doubt in my mind something will roll out before the market opens on Monday, for sure. So, because they need it desperately. And the only thing that this thing has that other corrections didn't have is that, yes, jobs are better, wages are better. But other than that, it looks just like any other classic correction slash bear market. Make sure you share this stuff. It's thought-provoking, give you another look at this whole thing. Alright, we'll talk to you soon. Thanks for watching.